The only thing colder than Toronto's frigid temperature right now might be Toronto's condo market. January's off to a very slow start across the GTA. And in today's video, I want to unpack what the latest trends are telling us, not just about sales, but about supply prices and what this could mean as we move into the spring market. My name is John Pasalis, and for 20 years, my team and I have been helping buyers and sellers navigate Toronto's housing market. Our approach is calm, thoughtful, and grounded in honest advice so people can make smart decisions without pressure or surprises. If you'd like to connect with me and my team about your own real estate plans, click the link in the show notes below or send me an email at askjohn@movesmartly.com. Now, let's start with the big picture. In January, condo sales in the GTA were down around 26% compared to the same time last year, while low-rise home sales, that's semis, detached, townhomes, down about 15%. So the slowdown's broad, but the condo market is clearly taking the bigger hit right now. Now, some people in the real estate industry might try to dismiss this decline by pointing to the record snowfall we had at the end of January. It was genuinely difficult to drive or park anywhere, especially in the hardest hit parts of Toronto. And to be fair, I initially assumed that that might help explain at least part of the weakness. But when we actually look at the data, that explanation doesn't hold up. When we compare the year-over-year change in sales week by week for the 4 weeks ending January 31st, the last week after the snowstorm actually had the most modest decline. Sales were only down about 7% that week compared to around 20% over the previous few weeks. So this isn't just about the weather. This is a market that's generally slowing because demand is weaker. Now, let's talk about what's happening in the condo market in a bit more detail because that's where the numbers start to feel a little bit more urgent. Condo sales in January weren't just down, they were at their lowest level since the financial crisis nearly 20 years ago. But what's even more concerning is what's happening on the supply side. New condo listings were down 16% over last year, which tells us that sellers are already holding back, but at the same time, active listings were actually up slightly, about 2%. But the combination of the weaker sales and the slight increase in supply has pushed inventory levels to a level we haven't seen before. Months of inventory in the condo market hit 8 months in January, which is the highest level we have on record, at least. Now, 8 months of inventory is certainly not a balanced market, not even close. It is a market with substantial oversupply, and it puts very real downward pressure on prices. And we're already seeing that the average condo price in January was about $625,000, which is down about 11% compared to last year. Now, before moving on from condos, there's one really important detail here I want to talk about. The condo market is not behaving the same way across all unit types. When we look at price changes over the past year, smaller units have generally seen larger declines compared to larger condos. And the inventory tells us the same thing, the inventory picture at least. Right now, if you look at the number of units, the months of inventory for small units, they're sitting at about 12 months of inventory. That's units under 500 square feet. That's an extremely difficult environment for sellers in that segment. Larger units, for the most part, have less inventory than micro units, although the relationship isn't perfectly linear. But, the message is clear that the micro condo segment is under the most pressure. And that has big implications because that's also the segment where investor ownership is the highest and investor demand is unlikely to return anytime soon. Now, if we shift over to the low-rise market, so that's detached, semis, and townhomes, here as well, we see that sales were weaker. Low-rise sales in January down 15% compared to last year. New listings were also down roughly about 12%. But despite fewer new listings, the number of active listings has surged. Active low-rise listings were about 10,000 in January, up 13% year over year. And what makes that number so notable is that it's nearly twice as many active listings as we typically see for the month of January. So months of inventory in the low-rise market is now just over 5 months. So, the low-rise market is soft, but not nearly as oversupplied as condos. Prices have come down here as well, but not as sharply. Average price was 1.18, down around 7% from last year. So How do we wrap all of this together? January is certainly showing us a market where demand remains very weak, especially in the condo market. We have condo prices falling at double-digit rate. We have record high months of inventory. We have the smallest units sitting in the most oversupply conditions we've seen in years. And the low-rise market is holding up somewhat better, but inventory is still climbing and prices are still trending down even with low-rise homes. Now, the big question is what happens next? We're heading into the spring market, which is normally when activity picks up, but the reality is there's still a lot of uncertainty in the economy, and uncertainty is the biggest thing keeping buyers on the sidelines. So, the key question, the key thing to watch over the next few months is whether demand continues to track below last year or whether we start to see some buyers slowly returning. And to be clear, by buyers returning, I don't even mean a surge in demand. I mean demand levels that are simply in line or slightly above last year rather than continuing to fall. And until we see that shift, it's hard to argue that this market has found a bottom. As always, I'll keep tracking the data closely and I'll share updates as we move through the spring. If you have questions about what this market means for you, whether you're buying, selling, or just trying to make sense of what's going on, please post a comment below or send me an email at askjohn@movesmartly.com.